care, mate. Take care, take care, take care.
Welcome to Looking at the Markets with David Modell. Today I wanted to make a video synthesizing the lessons that I've learned. I've had the opportunity to interview some amazing investors and traders, some of the best in the world. I'm very lucky, and I wanted to pass on what I've learned from them to you in this video. This is a little collage that I made, and this is just a few of the very generous people that I've gotten to speak with. And if you look through my past videos, you can see the interviews, and I encourage you to go ahead and check out those videos and subscribe to the services of these individuals who are so kind as to lend me and you guys, the audience, some of their time and insight and knowledge into the markets. And again, this is just some of them. You might recognize some of these people, and if you don't, then you really should check them out because they're all amazing. Alright, so here we go. In order to improve my own investing abilities and those of my audience, I've been on a quest to speak with and learn from the best of the best. These individuals have been extremely generous to take time out of their busy schedules to answer my questions. I felt a duty to take notes and pass on what I've learned to others. Now, some of the people I've interviewed are bullish on U.S. equities over the next few years, while others are bearish. Some prefer to keep physical gold or silver as an investment. Others prefer gold and silver stocks or ETFs. Some use stop losses to prevent big losses. Others just ride it out, and some even average down by adding to their positions when a trade goes against them. So as you can see, as far as any specific strategies or recommendations, there really wasn't any consensus among the people that I've spoken with as far as investing in any particular asset. It was very diverse. I spoke to a very diverse group of people, which is great, with people with different viewpoints on that. On the other hand, there were some things that they did agree on. However, there are some things that they all pretty much agreed on. These are the pearls of wisdom that I collected from the greatest minds, in my opinion, in the world of investing. Alright, so let me share some of these tips and just some insight and wisdom into investing and trading that hopefully you'll be able to use in your own trading. First of all, use small position sizes. And that means with every trade or every investment. You don't want to put, let's say, 50% of your assets into one trade. Not a great idea. Maybe like 5% or less, that might be a good guideline. And diversify among sectors. Because if all of your trades or investments are all in the same sector, then if that sector has problems, you're going to lose a lot of money. Alright, here's another one. Leave your emotions out of your trading and investing. They all pretty much told me that in different ways. You want to become, in certain ways, you want to be almost mechanical, meaning have a plan and stick with it, even when it's uncomfortable, assuming it's a good plan. If it's not a good plan, then don't use it. Here's another one. Know ahead of time what you're going to do if a trade or investment goes against you. Know ahead of time, before you place the trade. Because after you've placed the trade and now the stock or whatever starts going against you, that's not the time to start thinking about what you're going to do about that. You want to think ahead of time. Whether it's averaging down or just riding it out or using a stop loss, whatever it is, know ahead of time before you place the trade. Don't try to trade based on every news headline that comes out. Yeah, I heard that over and over. When you're just chasing the headlines, when you're being reactive to every little headline, because by the time you and I, the retail traders, get the news, most of the hedge funds already knew it and they've already reacted to it. And so we're usually chasing after the price action has already occurred. In other words, we're the last ones to react usually, which is not a good position to be in. If you're in it for the long term, consider companies that will be in demand even if the economy turns bad. I heard this several times. And some examples they gave were McDonald's, Philip Morris, Anheuser-Busch, utilities, precious metals, gold, silver, and so on. And this is nothing in this video is a recommendation to buy or sell anything. I'm not a registered investment advisor. I'm not telling you what to do. I'm just saying that, I've heard from many great investors, or a number of great investors, that you want to invest in companies or sectors that will hold up well if the economy gets bad. Don't try to call market tops or bottoms. This is pretty consistent among the people I've spoken with. If the market goes up a lot, and you want to say, okay, well, this is as high as it's going to go. This is the top. Well, as soon as you say that, guess what happens usually? It goes up a lot more. Or if it goes down a lot and you want to say, okay, well, this must be the bottom, it's not going to go down anymore, well, it probably will. No one knows where the top or bottom is. And even the greatest investors really are willing to admit that they don't know where the top or the bottom of the market is. They just have a plan and they stick to it. You're competing against billionaires and supercomputers, so you'd better get an education and have a good mentor. And any of the people that I've interviewed, they're all great mentors, and you can contact them. Check out those videos and contact them. And I try to be a mentor as well. I try to be a coach, and I always do the best I can with that. Getting a good education doesn't mean just watching a couple of YouTube videos, all right? YouTube videos are great. You're watching one right now probably, but watching a couple of videos on YouTube is not enough to really consider that an education to start trading or investing your own money. You need more than that. If you can't find a good trade setup or an investment with a good risk to reward ratio, just stay in cash and wait. All right? In other words, let the trade come to you. Don't try to force it. It's okay to stay in cash for a while and wait for the setup to come to you. And finally, the number one bit of wisdom that I consistently heard from the greatest investors who I spoke with, here it is. Your first priority is not to make money fast. Your first priority is preventing big losses. In other words, capital preservation should be priority number one. That's huge. And I heard that over and over and over, and it really is true. A lot of new traders and investors, they don't think about finding ways to prevent big losses. They make their number one priority making a lot of money fast, and usually that does not end up well. Alright, so I hope this was helpful to you. I plan to interview more of the great investors and traders out there, and I'm so grateful to both the people that allowed me to interview them and also to you, the audience, for listening and watching, and I hope you gained something from this video. So please give this video a thumbs up on YouTube, leave comments, and please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. And if you want to contact me, you can email me at any time at davidmodell@gmail.com. Thank you so much for watching and listening, and I'll talk to you again soon.
Yeah, mate. Take it, take it, take it. They're gonna take it off me. Take it, take it. They're gonna take it off me. Take it, take it.